So you want to buy a house, you don't really know where to start. There's different types of loan products. How do I know what's going to be the right loan for me?
Well, number one, I would say don't assume. Talk to a trusted lender. Get a full application in so they can tell you what you qualify for. My process is I get a full application, I understand and talk to the buyer to understand what their financial goals are. And once I have the application, I'll put it together and put together whatever loan product works best for them to meet their financial goals. So a lot of folks assume an FHA is the best for a first-time home buyer, and it really isn't always the best. So don't assume, apply, see where you land. There's no harm in just applying and see what loan product is best for you.
So speaking of first-time home buyers, if I'm a first-time home buyer in this market, are there programs that you have available that can help me?
There are some down payment options that are available for first-time home buyers that I'm accredited to offer. The biggest one being a $15,000 down payment assistance program for those that qualify. And there are also some other programs that allow discounted interest rates, discounted mortgage insurance premiums, and there is one that also allows for a 3% down conventional option rather than the normal 5% down.
Okay, so we're talking some pretty significant savings. How do you decide how much money I can borrow?
So a lot of that is dependent on how much you have for down payment or how much you're comfortable with putting down, and then what is allowed with your debt to income ratios. All of the loan programs have different maximums allowed for the debt to income ratio. So that will be dependent on how much you're allowed to borrow.
Okay. What is my debt to income ratio? How do I know what that is?
So we will calculate whatever your qualifying income is, and then we look at any debts that you currently have, whether that's in a current asset or a current mortgage that you have, or anything reporting on your credit. And then we take the ratio of your income versus debt, and that's how we decide your debt to income ratio, and that's what dictates a lot of the times which loan programs you will qualify for.
Okay. And as far as closing costs, I've heard closing costs can be pretty pricey and price some potential buyers out of the market. What should people be preparing for in terms of closing costs?
So closing costs will vary based on the purchase price of the house, but they're typically around 2 to 3% of the purchase price. And when I say closing costs, I'm talking about attorney fees, our origination fee for the lender, appraisal, and setting up your escrow. And your escrow, I think, is usually the most confusing part of for first-time home buyers, but it's basically setting up your adult piggy bank accounts to pay your tax bill and your homeowner's insurance. And we're making sure that there's enough in those piggy banks so that there's enough in there for your servicer to pay on your behalf when that bill comes due next year.
Okay. So even though I'm getting a bill in the mail from the county that I live in for my house taxes, that is in my adult piggy bank and that's already taken care of for me?
Yes. So it's being taken care of on your behalf, even though you're making payments toward it every month as part of your monthly mortgage payment. But yes, you will receive a property tax bill every year, and I get at least a dozen calls every year asking if they need to pay that, and it's one bill that you actually don't have to pay outright because you've been paying partly towards it every month with your mortgage payment. So it'll be paid for on behalf of you by your mortgage servicer.
Okay. And the same with my homeowner's insurance. I don't have to turn around and mail State Farm.
Nope. And you'll get that as well. But nope, you don't have to pay for that either.
All right. I'm loving this adult piggy bank.